What if I told you that one of these investments can make you money while you sleep, and the other one might wake you up at 3 in the morning to fix a broken toilet? Stocks? Real estate. Both have created millionaires. Both have also destroyed beginners who didn't know what they were doing. So in this video, we're breaking it down, simply and honestly. Stocks versus real estate. Which one should you start with as a beginner? By the end of this video, you'll know exactly where to begin. Let's get into it. What are you actually buying? First, let's remove the hype and talk reality. When you invest in stocks, you're buying small ownership pieces of real companies. Companies like Apple, Google, Nike, businesses that make money every day. When those businesses grow, your investment grows, and you make money in two main ways. The stock price goes up. Some companies pay you dividends, which is cash paid just for owning the stock. No buildings, no tenants, no phone calls, just ownership. Now compare that to real estate. When you invest in real estate, you're buying a physical property, a house, apartment, or building. You make money from monthly rent and the property increasing in value over time. Sounds great, until we talk about how much money it actually takes. How much money do you need to start? This is where most beginners struggle. With stocks, you can start with as little as $10. No loans, no credit checks, no long applications. You open an app, click buy, and congratulations, you're an investor. But real estate is very different. To buy property, you usually need a large down payment, closing costs, inspection fees, and emergency money for repairs. Most people also need a mortgage, which means debt. So let's be honest. For most beginners, real estate is not affordable at the start. And that's not a failure, it's just reality. How much effort does it take? Let's talk about time and energy. Stocks are passive. Once you invest, no maintenance, no tenants, no emergencies. You can literally go on vacation while your investments keep working. Real estate, on the other hand, is often an active job. You deal with tenant problems, repairs, late rent, taxes, insurance, legal paperwork, and yes, that famous 3 a.m. plumbing call is real. You can hire a property manager, but that cuts into your profits. Risk, the truth no one tells you. You've probably heard this before. Stocks are risky. Real estate is safe. That's half true. Stocks move up and down daily, yes, but if you invest in diversified funds, your risk is spread across hundreds of companies. And historically, over time, the market goes up. Now, real estate feels safer because prices don't change every day. But here's the hidden risk. One property, one location, one tenant. If something goes wrong, you feel it immediately. Bad tenant, you lose money. Big repair, you lose money. Market crash, you still owe the bank. Stocks have visible risk. Real estate has hidden risk. Returns, which makes more money? Let's talk numbers simply. Stocks have historically returned about 7 to 10% per year. In the last 10 years, S&P annualized return is around 12% per year, compounded, and Nasdaq's annualized return is around 15% per year. That doesn't sound exciting until you understand compounding. Small amounts invested consistently over many years can turn into life-changing money. Real estate returns vary more. Some people make a lot, some barely break even. Real estate can win big because of leverage, using borrowed money to grow faster. But leverage works both ways. If things go bad, losses are bigger too. Liquidity. Can you exit quickly? This is something beginners often ignore. With stocks, you can sell in seconds. Your money is liquid and flexible. With real estate, selling can take months. There are agent fees, legal costs, and long waiting periods. Your money is tied up.
Flexibility matters, especially early on. So which should you start with? Here's the honest answer. If you're a beginner, if you have limited money, if you want passive investing, if you want flexibility and simplicity, start with stocks. Build knowledge, build discipline, build capital. Real estate is powerful, but it works best later when you have savings, stability, and experience. The smartest investors don't choose one. They start with stocks and add real estate when they're ready. So remember this: stocks build your foundation. Real estate accelerates later. If this video helped you, hit like, subscribe for more beginner-friendly investing content, and comment below. Stocks or real estate? Which would you start with? I'll see you in the next video.